Hello, good morning to all. I hope that you guys have a great weekend. And today will be the second week before 2023 ends. Wow, time really passes very fast. So, very good morning. Welcome to today's Daily Dose of Market Insights by OANDA, presented by myself, Kelvin Wong, the Senior Market Analyst of OANDA Asia Pacific. Today will be Monday, a brand new trading week for 18th of December. Okay, 18th of December. So before we start our usual daily dose of market insights, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not offer or solicitation to buy or sell, no financial advice or recommendation for any investment product, as well as any forecast, prediction or projection in this documentation is not necessarily indicative of the future and likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so before we jump straight into the short-term technical outlook for today on the various asset classes ranging from the broad-based stock indices to the major FX as well as gold and West Texas oil, let's have a recap of what happened on last Friday. So I'll be stressing on only the key events as well as the release of key economic data. So let us start with the economic data release first. So on last Friday, we call it the flash PMI day. So what's flash PMI? PMI is actually in nutshell a survey-based, we call it a survey-based leading economic indicator where make it the compiler actually send out surveys to a sample of businesses across the major region globally. Okay, so last Friday was the developed nations. That means we have Japan, Eurozone, UK, and US. So if let's take at the what happened in Eurozone. So we know that Eurozone in the last couple of months since the middle of this year, it's been in the risk of a stagflationary rise scenario. And indeed, it's true. If you look at the latest flash reading, so what I mean by flash, that means it's a preliminary reading for the month of December. So we know that December hasn't ended yet. So PMI, make it will actually always release 2 weeks advanced flash PMI reading for the respective month. So this month will be December. So this reading will be for the month of December, but it's a preliminary reading. More or less, it's about the same when you actually finalize it towards the end of the month, which is the last week of December. If you look at the screen that I'm going to share with you right now, over here is this is the data. Okay, we're going to see. So if you look at the Eurozone one over here, okay, let me highlight larger so that you guys can see bigger. Okay, so over here in Eurozone, the manufacturing PMI continue to be below 50. And this at below 50 is contractionary. That means it's not expanding, it's contraction. So manufacturing activities in Eurozone continue to contract at 44.2. Slightly below consensus of 44.6. Services also fare pretty badly, 48.1, so below 50, below 49. That was market expecting. Very similar in UK as well, 46.4 for the manufacturing flash PMI, below expectation of 47.5, and also below the prior month of 47.2 recorded in November. So manufacturing activities in UK is still in the doldrums, but what's positive over here is that the services PMI actually tick up much higher at 52.7 versus 51.0 on the consensus and above 50.9 on the previous month recorded in November. So if you look at the trend of the services activity in UK, it's still kind of holding relatively resilient. And if you look at the flash PMI data of row 53.7, right, is actually the second consecutive month of expansion and outperformed the Eurozone, and it was also the fastest pace since May this year. Okay, you look at the strong recovery in the month of December. So that actually explained, right, in last week BOE, Bank of England monetary policy meeting, why there are actually 3 central bank officials are in favor of hiking. Okay, so the data actually pretty much evidence. But all in all, most we recall those who follow us very closely our daily dose of market insights since about 1.5 weeks ago, we actually flipped to a bullish bias on the sterling pound. So it actually reflects the ongoing bullish sentiment, or reinforce this ongoing short-term bullish sentiment on the sterling pound as well, that we have 1.5 weeks ago, supported by this uptick in this United Kingdom, UK/Services PMI. All right. Then now, back to US. So the same story for US as well. So if you go to US, the services side of the story continue to be pretty much resilient. 51.3 continue in expansionary mode versus 50.6 expected, above expectation and above the previous month of 50.8. So if you look at the trend of the services PMI over here, okay, it continued to actually tick up much higher. So that actually explains the situation where there is a kind of a Goldilocks scenario in US right now. That means, i.e., yes, we have higher interest rate in the last 1.5 years or so. Certain sector of the US economy is not doing that well. Bankruptcy is rising on the corporation front, higher credit costs. But however, the services sector continues to be pretty much resilient. So there are still pockets of what I call growth in the US economy to actually offset this higher interest rate cost environment. So that should also explain why the US stock market is one of the stock market other than Eurozone, Germany, which has hit a fresh all-time high, and as well as India, the US stock market continued to be pretty much resilient as one of the top performer this year, with the Dow Jones Industrial Average making fresh all-time high last week, and not far off will be the Nasdaq 100 as well as the S&P 500, which is just less than, I think, about 2% away from their current all-time high. Then what we could see over here is that the manufacturing data continue to be weak in US. Manufacturing PMI going to contract much worse in the month of December, 48.2, below 49.4 recorded in November, and below 49.3 as expected. But as we know that US itself is more, the economic growth in US is close to about 3/4 related to services rather than manufacturing. So I do believe that as long as the services are going to humble on the positive side of the story, it could still be a Goldilocks scenario for the US economy. So that actually explain the ongoing positive animal spirits that's being reflected on the US stock market, at least in the short to medium term. So what we could see over here is that given the fact that the services sector in US going to be resilient, we have one Federal Reserve official, William, Fed speak on Friday, saying that it's still premature to discuss March reduction. That means talk about a rate cut in March. Still recall that, like I shared with you last week, there is growing, increasing expectation that the first interest rate cut will come in March, as soon as March, with a high probability about close to about above 50%. So despite his this much more rather hawkish Fed speak from Fed Williams to actually not in agreement of a March reduction for next year 2024. But however, if you look at the CME FedWatch tool, okay, so the CME FedWatch tool is indicative of the current Fed Fund futures pricing as calculated by the CME FedWatch tool. So we could have a view, or aggregate view of the percentage, the likelihood based on market expectation. So if you look at the probability over here, okay, so for the month of March, okay, it's still so high at 73% for the first cut to come in, despite Williams, Fed official Williams rather hawkish tone on last Friday. So market are still betting that the Fed were to be at still dovish in the in 2024. So the only thing that could disappoint the market outlook will be in the month of March. All right, because in the month of March, they will actually release their next dot plot again. Okay, the next dot plot. So right now, what we could see over here is that overall, despite we see Fed official Williams slightly hawkish rhetoric on last Friday, yes, the market sold off slightly, but overall, it still managed to actually perform relatively well. Why? Because the SPX remains unchanged. The top performer is the Nasdaq 100 with a daily positive gain of 0.52% on Friday. The Dow Jones Industrial Average managed to inch up higher, slightly higher at 0.15%. Only the Russell underperformed with a daily loss of negative 0.77% on last Friday. But overall, the S&P, the Nasdaq, and the Dow Jones managed to actually have 7 consecutive weekly higher closes. And you look at last Friday performance, it's managed to actually be supported by the 7 mega cap stocks, especially the semiconductor sector, which done exceptionally well on Friday. All right, so overall, net, we do not see a very clear sign of a short-term to medium-term bearish reversal yet. That is pretty much evidence on that is being inflicted on the US benchmark indices. Okay, other news to take note of will be more on the oil price. So do you recall that oil price on last Friday we flipped to a bullish bias because there are several key technical elements, and very interestingly, right on Sunday, the Russia actually announced that they're actually looking for additional oil export cuts for about 50k barrels per day in the month of December. All right, so that actually kind of reinforced our short-term bullish outlook technically on the oil price. So very strangely, sometimes you see this kind of correlated movement where prices move ahead of the news. So this news was actually released on Sunday, okay, where Russia actually kind of confirmed this additional oil export cuts for about 50k per barrel in December. Okay, so these are the key data or news that actually took place on Friday that shaped the key movement on the financial markets. So now let's straight jump ahead on the short-term technical outlook that I'll share for today. So let's stress this is short-term technical outlook. That means covering only to 1 to 3 days rather than a multi-week to multi-month approach. Let's start with the FX market first. So overall, if you look at the FX market based on the dollar, so the dollar, yes, it managed to actually inch up much higher on Friday based on the dollar index, but it still remains below the 20-day moving average, and as well as below the former last lower low that was seen on the Tuesday of 28th of November, right over here. That means the dollar's strength on last Friday didn't surpass this 102.65 level. All right, and also another intermarket correlation that impact the dollar strength and dollar weakness will be the US 10-year Treasury yield. In a nutshell, if US 10-year Treasury going to rise higher, it's actually in favor of dollar strength because of the dollar Treasury premium over the rest of the world. So we know that the US 10-year Treasury yield right now is actually going to inch down much lower due to increasing dovish expectation of the Federal Reserve in 2024. So we see that the US 10-year Treasury yield going to plunge on Friday below the 200-day moving average. Okay, so all in all, right, there is still, if you look at the daily RSI of the 10-year Treasury yield, okay, it's oversold, but there is no signs of a bullish divergence, indicating to a what I call a lower odds of a bullish reversal at this juncture. Okay, so implicating that there is still further weakness on the US 10-year Treasury with the next key support coming in at 3.6. Okay, so with that ongoing weakness of the US 10-year Treasury yield, that's why we see that dollar strength that was seen on last Friday managed to be on resistance. That means, i.e., there is no clear sign of a dollar resurgence yet, as shown technically on the individual FX major pair that I will share with you. Let's start with the euro dollar first. So if you look at the euro dollar, yes, on Friday the dollar sold off, but after that it managed to held right at the 20-day moving average. Okay, bear in mind this is an hourly chart. So what I did over here in TradingView, we are able to overlay higher time frame technical elements on the short-term chart. So I could do a 20-day moving average on an hourly chart. I also can do a 20-day moving average on a 50-minute chart. Okay, so that's the beauty about TradingView. So net, I don't want to talk into details about TradingView, so more about the focus on the technical outlook. Bounce off the 20-day moving average, right above 20 match, also right above our short-term technical pivotal support level that we had on last Friday to maintain that short-term bullish outlook, 1.0870. So, and also if you look at the RSI, also bouncing off right above the oversold region, indicating to us that a bit of signs of a short-term bullish momentum coming back into the picture after last Friday initial sell-off. short-term sell-off. So as long as 1.0870 short-term pivotal support holds for the euro dollar, we'll be still maintaining at our short-term bullish outlook on the euro dollar, with the near-term resistance coming in at 10960 for today. A break up above this level potentially sees the next resistance coming in as zone at 1.1010 slash 11040. Only a breakdown below 10870, that means an hourly close below 10870, negates this bullish tone to see the extension of this minor corrective pullback towards the 200-day moving average at 1.082 slash 1.0780, which also correspond to the rising 50-day moving average as well. All right, so before I touch on the sterling dollar, let me expand my screen first by hiding myself so that you guys can see much clearer. Okay, sterling dollar. So sterling dollar continue to be much stronger than the euro dollar in terms of the momentum. Price action didn't actually reverse downwards so much over here. So what we could see over here is that we start to see the sterling dollar holding above the key short-term pivotal support at 1.2610. RSI also managed to turn upwards over here, right at a parallel ascending support level. Okay, so all in all, right, we will still maintain that short-term bullish outlook as long as 126.10 short-term pivotal support holds. We also correspond to the rising 20-day moving average over here. So as long as this level holds, 126.10, maintain that short-term bullish outlook, with the first resistance to watch on the sterling dollar at 128 figure. Only a breakdown below 126.10, hourly close below it, negates this short-term bullish outlook to see the continuation of this minor corrective pullback towards the next support zone at 125.45 slash 128.5 figure, which correspond to the upward the 200-day moving average, and as well as this medium-term ascending trend line that is in place. Okay, sorry, my chart in place since the low of 1st of November. All right, now moving on to other major FX pair, which is the Asia Pacific pair, will be the dollar yen. So dollar yen, bear in mind that dollar yen, do watch closely. Why? Because dollar yen itself, BOJ will actually starts to meet today. It's a 2-day BOJ Bank of Japan monetary policy meeting. The outcome will release tomorrow at around 11 a.m. to 11:30 a.m. Singapore time. Tomorrow, but there's no fixed time slot that will release. Traditionally, it's between 11 a.m. to 11:30 a.m. And if it goes beyond this time, beyond 11:30 a.m., there could be a chance there could be a major monetary policy change. Okay, this is based on the past historical announcement, no guaranteed, but for sure there is no fixed time release on the outcome of the BOJ monetary policy meeting that is ending tomorrow, 19th of December. So there is a lot of rumor ongoing that potentially the meeting for tomorrow is still live. That means there could be a chance that BOJ will start to do adjustment to their ultra dovish monetary policy by removing the short-term interest rate at a negative level. Okay. Yes, even though last week there was a release by a media report by Bloomberg stating that according to their sources, very unlikely there will be a change in their monetary policy meeting. So market now is just inferring to the last public speeches by BOJ governor that was made about 2 weeks ago, where he did mention to Parliament that BOJ may start to face a challenging time in terms of policy making this month and early next month, and as well as BOJ, one of the deputy governor, mentioned in public speeches that Bank of Japan should be better. Japan should be better off with a removal of short-term negative interest rate policy. So, based on these two slight hawkish tilt statement by key BOJ officials, that actually explain why market is actually still expecting tomorrow announcement to be still live. But technically speaking, the movement of the dollar yen still remains weak right now in terms of their technical configuration, the dollar yen. Price action on last Friday, yes, traded sideways, but failed to break above the 200-day moving average, now acting as a near-term resistance at 14220 level, there about 14220 level, there about over here is testing this level. So last Friday, we have a Titan key short-term pivotal resistance at 14330. So still maintaining 14330 as my short-term pivotal resistance level. Looking for a retest on the low of last Thursday at around 140.95, 140.95, this low over here. Let me remove this. Okay, 140.95. So as long as 143.30 short-term pivotal, Titan short-term pivotal resistance holds, still maintaining that short-term bearish outlook on the dollar yen, indicating to us that this short to medium-term downtrend in place since 30th of November still remains intact. So this movement over here could be the start of a new potential impulsive down move. A break below 140.95 exposes the next support at 139.20. Only an hourly close above 143.30 short-term Titan short-term pivotal resistance will invalidate this bearish impulsive down move to see another round of it's still minor counter trend rebound. No clear change of the short-term trend yet because price action is still below the 20 and the 50-day moving average. So a break above 143.30 invalidates the impulsive down move, kickstart potentially a minor counter trend rebound within this short-term downtrend that is still intact towards the next resistance at 144.80. A break above 144.80 takes up to a retest of that 20-day moving average at 14670 level. All right, so that's the outlook for the dollar yen, still maintaining that short-term bearish outlook for today below 143, as long as 143.30 short-term pivotal resistance holds. Now, next will be the Australia dollar. So the Australia dollar managed to actually test the short-term Titan short-term pivotal support on Friday and stage is a rebound, indicating to us that bullish momentum still remains intact because 66.70 short-term pivotal support holds on Friday. So no change for sure. This is a key level to watch to maintain that short-term bullish outlook on the Aussie dollar. 66.70 short-term pivotal support level holds. Maintain that bullish outlook with the near-term resistance to watch at 67.45 followed by 67.90. Why 67.90 is important? Because if you look at the daily chart on the Australia dollar, 67.90 is in fact the major descending trend line that is in place since 25th of February 2021 high. So that's close to about 2 years ago. Okay, major descending trend line. Now, that's for the outlook of the FX market. So overall, what we could see that despite dollar bouncing a bit on last Friday, it's still remaining on resistance. That means overall, the technical picture across the major pair is still potentially advocating for further dollar weakness in the short term from a technical analysis perspective. Now, major stock indices. Let us start with the US market first, the Nasdaq 100. So the Nasdaq 100, yes, it managed to sold off on Friday during Fed that relatively hawkish bid from Fed official Williams, but it managed to help above the short-term pivotal support level that we have on last Friday at 16,330. So still no change. I do not want to tie it so tightly on using last Friday's swing low. Okay, this was last Friday's swing low. Okay, because price action didn't clear above. Give me a minute. So I think my screen is hang for a moment. Oh gosh, what's going on? It is Nasdaq 100. So I don't want to target so tightly, right? At last Friday low, which is 16,430, because price action hasn't broken above last Thursday high, which is very close to its all-time high. All-time high 16,770 as reflected in OANDA's trading platform. So still using 16,330 short-term pivotal support level. As long as any potential setback managed to hold above 16,330, maintain that short-term bullish outlook, at least a test up to the all-time high at 16,770, followed by the next resistance at 16,950/16,990, based on a calculation of a cluster of Fibo extension level. Okay, so if you look at this Fibo extension level right now, based on the current price action movement that is in place since 7th of December swing low, it should also correspond to this ongoing parallel ascending channel, okay, that also come close towards the upper limit at this 16,950/990. So you see a confluence at this level, FIBO extension cluster, and based on the latest price movement, the upper limit of this minor ascending channel also confluence with the next resistance at 16,950/16,990, making it as an important inflection point going forward as well. Okay, however, a breakdown below 16,330 then will negate this impulsive up move to kickstart a minor corrective pullback to test the 20-day moving average, also confluencing at the resistance now at support now, pardon me, at 16,160. So that's the outlook for the Nasdaq 100. Wall Street, which is the Dow Jones Industrial Average, continue to remain resilient. Over here, price action on Friday retested the former upper limit of this minor ascending channel that was retested earlier on last Friday after the release of that relatively hawkish speech from Fed Williams, but managed to hold. So this is the near-term support level, 37,112. So I don't want to target so tightly. So still using 36,970/36,890 as my short-term pivotal support level, maintaining that short-term bullish outlook. For the first resistance to watch will be at 37,455. So that was close to last Friday high. A break above this level should take us to the next resistance level at 37,800, which is a FIBO extension cluster level. Only an hourly close below 36,890 invalidates this impulsive up movement on the US Wall Street 30 to potentially kickstart a minor corrective pullback within a short-term uptrend phase that is still intact towards the next support level at 36,655/36,560, which is this minor congestion area over here from 13th of December to 30th of December, as well as conversing with the lower limit of this minor ascending channel from 10th of November 2022 swing low. All right. So all in all, even though the breakdown of 36,890 breaks, it hasn't invalidated this short-term uptrend, only kickstarting a minor corrective pullback within this short-term, medium-term, short-term uptrend that is still intact of the Wall Street 30, because price action is still holding above the minor ascending channel support in place since 10th of November low, and as well as the rising or upward sloping 20-day moving average. Okay, now that covers the benchmark of the US Wall Street 30. Let's go to the European indices, German 30. So German 30 over here, we start to see the German 30 still traded sideways on last Friday, but managed to hold above the tightened short-term pivotal support that we have on last Friday at 16,735. So no change, still holding using 16,735 short-term pivotal support. As long as this level holds, first resistance to watch will be at 16,910. Only a breakdown below 16,735 invalidates this bullish impulsive up move to kickstart a minor corrective pullback towards 16,590. A breakdown below 16,590 potentially exposes the next support at 16,440, which confluence with the rising 20-day moving average as well. Okay. Hong Kong 33. So Hong Kong 33 managed to pierce up on last Friday and hit that resistance that we mentioned on last Friday at 16,890 before selling off again during the US session. And right now during the Asia session, it managed to retest the tightened short-term pivotal support that we have on Friday at 16,620. So still no change, still maintaining that short-term bullish outlook on the Hong Kong 33 index. RSI also managed to help above this parallel ascending support level at 45 level. This is the hourly RSI. So the Hong Kong 33, which is we call it our trading platform, which is the proxy of the Hang Seng Index, 16,620 short-term pivotal support holds, still looking maintain that bullish bias. First resistance for sure will be at 16,890, which is right now confluencing with the downward sloping 20-day moving average. So price action got to break up above 16,890 to further reinforce a much more we call it a counter trend, this ongoing counter trend rebound towards the next resistance at 17,160, which right now confluence very closely to the downward sloping 50-day moving average as well as the 50% FIBO retracement of that previous down move from 16th of November to 11th of December. Okay, so still maintaining that bullish outlook as long as 16,620 short-term pivotal support holds. However, hourly close below this level invalidates the bullish outlook to see another round of choppy movement to retest 16,3865, followed by 16,110 next, or 16,100 next, which is the major support level. Okay, 16,100 is the major support level. Okay, now that's pretty much covers the major indices. Let's go on to oil price. So oil price going to inch upwards on last Friday, holding above our short-term pivotal support at 70, where last Friday the price action pierced down and formed a bullish dragonfly hourly doji before going up and trade sideways right now. So still no change as long I don't tie it so tightly at last Friday's swing low, which is at 70.48 last Friday low. So still using 70 level as my short-term pivotal support for West Texas oil. Maintain that short-term bullish outlook towards the next intermediate resistance at 7340/7410, which also confluence with this downward 20-day moving average. Okay, so all in all, right, price action still continue to be in a much more of a minor counter trend rebound phase. We in a short to medium term downtrend that is still intact. Why? Because price action is still trading below the 20-day moving average, as well as the downward sloping 50-day moving average, and also the long-term 200-day moving average as well. All right, unless price action has managed to have a clearance above 78.40, then we will start to see a much more substantial recovery in West Texas oil. Okay, from a technical analysis perspective. Okay, now lastly will be the gold spot, okay, XAU/USD. So no change. Price action managed to rebound off that near-term support level that we have on last Friday, 2017, which is all the upward sloping 20-day moving average. So we don't want to tie it so tightly. So still using 19,097 as my short-term pivotal support level, which confluence with this rising 50-day moving average right now. So as long as this 1997 short-term pivotal support holds, which is very closely to that 2000 psychological level for spot gold XAU/USD, so still maintain that short-term bullish outlook for spot gold, heading towards a retest of last Friday's swing high at 2043. A breakout above 2043 exposes the next intermediate resistance at 2067 in the first step. Only a breakdown below 1997 then could see a potential another round of choppy corrective decline to retest the 200-day moving average, which is the major right now the key medium-term pivotal support zone of 1965/1955. Okay, so still maintaining that short-term bullish outlook on gold, holding above 1997 key short-term pivotal support. Okay, so that's pretty much sum up to the technical outlook for today that I'll share with you all. So let's take a look at the calendar before we go to see what's the key calendar for today. Okay, today over here. So for today, it will be a rather quiet week. Okay, if you look at today's calendar. Okay, so today's calendar over here will be rather quiet aspect over here, except for Germany. You have some business sentiment indicator will be released at 5 p.m. Singapore time for the month of December. Then other than that, it will be a relatively quiet week, quiet day ahead, pardon me, with the release of 11 p.m. There's this housing market index that will be released. Not so really that key, but market may pay a close attention to see the state of the US housing market, despite it's still holding relatively quite firm right now with a higher cost of funding in the last 6 months or so. So that is about it for today's daily dose of market insight. So with that, do have a great day ahead, and we shall speak again tomorrow. Thank you.